Hey everyone, Steven here from the Trading Channel, and in today's video I'm going to be explaining to you how my February has been so far trading in the markets. So far not so good in February. I've only won about 5 out of my last 14 trades this month, and needless to say, I am in a drawdown. So today I'll go through the charts and show you some of those losses, also show you some wins, all the trades that I think may be educational for you, and later on in the video I'll show you an equity curve of the account that I'm trading here on my YouTube channel, and talk to you a little more about drawdowns and how they affect you as a trader. So I'll let the intro and disclaimer roll, and I'll see you guys on the other side. Alright, so before we get started looking at the losses I took through February, what I want to do is share some of the analysis I did on the chart in front of you in order to get involved in the trade that you see as active on the CAD 1 hour chart. The reason you see some of this analysis on the chart in front of you is because I planned to post this on TradingView. I just never got around to doing that earlier in the week. So if you'd like to see some of my analysis in more of a live format than on these YouTube videos, then check out my TradingView by clicking the link in the description below. And on the chart in front of you, you see a strategy that is a little more complicated than most of the strategies that I teach and use here on my YouTube channel. And for that reason, I may not try to teach this strategy, but just kind of give you an overview of the analysis I went through before placing this trade. I will have a training course explaining this strategy on my website that is due to be released in a couple of months. So if you are subscribed to this channel, make sure you stay subscribed. And if you are a new viewer, then make sure to subscribe to this channel, because anyone that is subscribed to my YouTube channel before my website comes out will receive special discounts on courses and mentor programs. So keep an eye out for the promotional video about my website. And with that out of the way, let's talk a little bit about the chart you see in front of you. So here on the CAD, we had a very impulsive move to the downside back on February the 3rd. This impulsive move took us down 450 pips. And what I was looking for after the impulsive move was the creation of a trend line, which required a few different support levels to come in. And then after drawing the trend line, I decided to sell the breakout after a break and close below that trend line in expectation for the market to shoot another impulsive leg down from the highs here and give me a nice profit on this trade. And so far we've made it down about a third of the way to profits. And at first my stop loss was above this previous structure level here, and since breaking below and closing below a support level here, I've decided to move stops down to just above this previous little resistance area here, a little bit of trade management to get some of the risk off the table. And hopefully within the week we'll see this market continue to roll over and come down and hit our profit targets. Alright, so next let's take a look at some of the losses I've taken through February and the reason that I seem to be in a drawdown right now. First up, we're going to take a look at the euro dollar. And here on the euro dollar, as you can see, we have recently been stopped out of this trade for minus 68 pips. But earlier in the month, we had a loss on a 786 strategy on the euro dollar, and that loss came in back on February the 1st. And as you can see, we broke below one structure level, two structure levels. And with that being the case, I decided to take this trade as a 786 trade, pulling from this swing high down to the newly created swing low and selling the 786 here with profits down at previous structure and stop loss above previous swing high. As you can see, this trade clearly lost, and many of the trades we take a look at today will be similar. This was a very well executed trade. It just did not work out for me this time. But we did have a good win on the euro dollar in the month of February that came right over here on February the 4th. If you can take a look at this structure level here, you see that we broke and closed above it. And what I do when I see a break and close above a couple of different structure levels, as you can see, we also broke and closed above this previous resistance. I go from my swing low here up to the newly created swing high, and we look for what? A 786 retracement, which we got right here, and we take our stops down here below previous structure, targets up at the bodies of the previous candles. That's where I take targets. And as you can see, we actually had a nice win on this trade. The only other trade that we had this month on the euro dollar was the one that you see here on February 15th that has recently stopped us out. Next, let's take a look at the dollar yen. And on the dollar yen, we are currently short on the bat pattern. I actually don't know if we've been filled yet. Maybe not quite yet. But so far in the month of February, the dollar yen only has produced one trade that we could take according to the rules of our trading plan, and that was on February the 5th. As you can see here, we had a break and close above a couple of different resistance levels. For that reason, I took a Fibonacci retracement from swing low up to swing high, expecting trend continuation after reaching this 786 retracement, and it did not quite work out like that. This was a pretty significant loss at the beginning of the month, and it seems to me that at the beginning of the month a lot of pairs decided to completely change the direction of trend that they were in, and that could be a very big reason why I'm in such a bad drawdown at the moment, and a reason that I lost so many trades in a row towards the beginning of the month. Next, on the dollar Swiss, we had a couple of losses. I'm not going to go through those. Instead, let's skip down to the pound dollar, where we had a winning cipher pattern. And I will let you see if you can spot this cipher pattern before I draw it in. If you're interested in learning about the cipher pattern, then check out my video tutorial on how to identify a cipher pattern. I'll post a link to that video in the bottom left hand side of your screen. Have you spotted it yet? If this is what you saw, then you are correct. Big cipher pattern win there for us on the pound dollar, which helped try to get us out of the drawdown, but it proved to just not be enough. As we move along down here, the dollar CAD, I've already shown you the trade that we are in currently. We also had a winning cipher pattern on this pair on February the 1st. If you're not familiar with the cipher pattern, again, I will post a link in the bottom left hand side of your screen. And this cipher pattern comes in starting our X point from here, X to A to B, B to C, CD completion right around there. Market rolled over, easily hitting our first targets. We had a loss on the Aussie CAD, but let's skip that and go down to the pound Swiss, where we had a couple of losses as well in February. Our most previous loss here on the pound Swiss, which was a bat pattern, X to A to B, B to C, CD completion right up here at the 886. We rolled over a bit, but did not quite hit targets, and we came up and ended up being stopped out earlier this morning on this trade. Moving along, we'll take a look at the Euro Aussie. The Euro Aussie also recently lost a bat pattern for us earlier this morning. X to A to B, B to C, CD completion at the 886, and we have continued to drop even after hitting the completion point of our bat pattern. So that trade stopped us out, and we won a pretty nice 786 trade. I'll let you see if you can spot it. This trade came in on February the 10th. Do you see it yet? We had a break and close above previous structure levels. So I took a Fibonacci retracement from this swing low up to swing high. We bought the 786 retracement, and we had targets up at previous structure, which were hit on February the 11th. We have a trade open right now on the Euro Pound. This was a 786 trade that we had, and we have come down very close to hitting our stop, and also we've closed below our previous structure level. So if we get back up to our entry, we'll be closing this trade at break even if we can get back up here to the 786 retracement. Next one down is the New Zealand dollar, where on February 11th we had a successful 786 trade. As you can see here, broke below previous support level. Then we take our Fibonacci retracement, swing high to swing low, We looked for targets back at previous structure, the bodies of the candles, and we had our stops placed just above previous structure resistance, as you can see there. And this market came up to test previous structure, but eventually did roll over, come down and hit our targets. So that's the way my February has been. That's just a few trades out of the 14 that we actually made that I thought would be pretty educational for you. Next up, we'll go over to a spreadsheet, and I will show you how these trades have affected my equity curve. So here's my equity curve as of January the 26th. The last review video I did was on January the 30th, and if you were able to watch that video, then you will remember me saying that I thought I was pretty close to having a drawdown, because I normally have one that is pretty significant, somewhere around every 3 months, and this drawdown normally lasts between 2 weeks and 2 months. There's no way to really tell, but that's kind of what I expected. And wouldn't you know that just a couple of days after posting that video is when this drawdown started. As of January 26th, we had made about 1,402 pips since 11/16, which was roughly 3 months of trading. And since my last review video on January the 30th, I have only won 5 out of my last 14 trades, putting me into the significant drawdown that I was talking about. If you'll remember back to that video, I did say that I thought I would have a drawdown bringing me down to closer to 1,000 pips here before continuing to rally up. And if I paste in these numbers of the total pips we've made in the account, you will see that that's almost exactly what we've done so far. We were up here at 1,402 pips, and through the month of February, through all the losses, we have come down closer to 1,100 pips and began to consolidate. Hopefully we won't go much lower than this. This is already about a 6% drawdown for me, and normally these drawdowns don't go down much lower than 8 to 10%. And finally, having a drawdown is not necessarily fun, but it is something that I wanted to show you guys so that you can see that it's not always just a straight uphill run when trading. A lot of beginners seem to think that professional traders do not lose, and that is wildly inaccurate. Professional and successful traders lose normally somewhere around 40% of their trades, sometimes a little more, sometimes a little less, depending on the way their risk-reward profile is set up. But you do not have to necessarily be 70 or 80% accurate in order to be successful trading. As you can see up here, if we take a look at the numbers section of my spreadsheet, I'm actually only about 58% accurate in my trading decisions, and I only have around a 1.2 risk to reward. I would not call this risk to reward great, and I would also not call 60% accurate great, but it's good enough to produce 1,206 pips in 4 months. And some of you out there may see that as a really good performance, and some of you may see it as not so good of a performance. But let me put it to you this way: if you were trading a $10,000 account and you made 1,200 pips in a matter of 4 months, and you were trading a normal position size, that would make each trade risk and gain somewhere around $2 per pip. So if you were making $2 per pip and you successfully made 1,200 pips in 4 months, then that would be somewhere around $24 or 24% of a $10,000 account. 4 months is a third of the year. So if you were pretty consistent in your trading for the rest of the year, then you should be able to profit somewhere between 60 to 80% by the end of the year. And guys, if you can produce 60 to 80% in a year, you are a successful trader. Whether that 60 to 80% is on a $10,000 account, a $2,000 account, a $500 account, or a $100,000 account, if you can produce 60 to 80%, then you are doing very well for yourself, especially if that 60 to 80% is with no money management. So don't be discouraged if you're only winning 50% of your trades, because you don't have to have a very large edge over the market in order to be profitable. You just have to have a slight advantage. That's how professional traders make money, is by having a slight advantage over the market. We wake up every day with a plan that is proven to give us a slight advantage over the market, and we trade that plan to the best of our ability in order to produce us as much profit as possible. And after we have that working plan that's proven to be profitable, that's when we decide how big of a position we are going to trade. And that's called risk management. My next video will be a tutorial explaining the importance of risk management and how to use it in your trading plan. So if that's something you're interested in, then make sure you subscribe to this channel. If you enjoyed this video, then please hit the like button for me. Share this video with others so we can reach as many traders as possible with this and make their journey a bit easier. Again, thank you for viewing, and I'll see you guys next time.